Welcome viewers. On behalf of Iravati Research and Communication Center, this is Pratim Ranjan Bose. In today's edition of CEO Speak, we will discuss the emerging trends in microcredit and financial inclusion. I have with me Mr. Jiji Mammen, the newly appointed Executive Director and CEO of Sa-Dhan, the Association of Community Development Finance Institutions. Welcome, Mr. Mammen. An industry veteran with over 36 years experience in microfinance, agriculture, and rural development, Mr. Mammen was earlier the managing director of NAB-FINS, a microfinance institution promoted by National Bank for Agriculture and Rural Development, that is NABARD. As the founder of MD and CEO of Micro Units Development and Refinance Agency Limited, or Mudra, Mr. Mammen was in charge of implementing the Pradhan Mantri Mudra Yojana for 3 years from 2015. He was also the country head of Department of Refinance in NABARD. Sa-Dhan has a membership base of 2013 institutions, including Non-Banking Financial Company or NBFC, NBFC microfinance institutions, societies, trusts, cooperatives, and self-help group promoting institutions, etc. Sa-Dhan's membership network reaches out to approximately 44 million or 4.4 crore beneficiaries with loan outstanding of more than rupees 1.1 lakh crore in 90% of the districts in India. From personal to country level, access to finance is an important tool to build assets. Many or most of us couldn't probably own our houses without access to loans. Easier the access became, earlier we built the houses or purchased an apartment. However, the access is asymmetric and is very limited to the majority and is limited to the majority at the bottom of the pyramid. There are many reasons behind such low access of finance to poorer sections of the society, but two most important of them are A, lack of tools to measure the repayment potential, and B, inability or incapacity of the large financial institutions to deal with retail clients who might, for these retail clients are too small. They may be asking for just rupees 10,000, and that might change their lives. But it is very difficult for a large financial institution to reach out to that person. This was the same reason behind low penetration of financial products marketing in India. This is the space where microcredit institutions come in. The role and importance of microcredit institutions in building a strong and resilient economy is well discussed, particularly with respect of Bangladesh and the experience of Grameen Bank under the leadership of Nobel Peace Prize winner, Professor Yunus. The issue caught the attention of Indian policymakers sometime in the 1980s or 1990s. Since then, a whole lot of initiatives were undertaken. But a couple of recent developments added a new dimension to the issue. These are A, the launch of the Pradhan Mantri Jan Dhan Yojana that focused on opening zero-cost, zero-balance accounts in 2014. B, elevation of biometric Aadhaar card as a key identity to access government goods and its seeding with bank accounts, mobile phones, etc. C, launch of Unified Payments Interface or UPI in 2016 that brought a revolution in the FinTech sector and enabled even a Pani Puri or a Golgappa seller to accept payments of a few rupees through mobile transactions. Notably, the mobile transactions are linked to bank accounts, and India is now topping the world both in terms of the volume of transactions as well as per capita use. This, to my mind, bridges a major gap in financial inclusion of the poor and might open a vista of opportunities in the future. We are noticing the emergence of payment platforms like Paytm or Google Pay in loan dispersal agencies. With this background, let us turn to Mr. Mammen. Sir, let me bring the elephant in the room first. According to the published reports, in April-June quarter of this fiscal year, Paytm disbursed 8.5 million loans, up by 492%, that is nearly 500% from the year ago period, worth $703 million or nearly rupees 5,500 crores. This is way bigger than many or most microcredit institutions can think of. These are small ticket size personal loans without end-use restrictions. The model is similar to traditional microcredit institutions, only the mode is different. I have three questions to you, sir. A, are we witnessing a role merger? B, is the beneficiary base expanding down the pyramid or the fintech players are simply serving the same creamy layers? And C, how do you see the microcredit sectors or space evolving? Over to you, sir.
Thank you so much, Pratita. In fact, you have raised a very, very right point, very valid point. In fact, if you see the Indian, the microcredit scenario, the requirement for the credit is quite large. If you see that right now, the microfinance is estimated to be somewhere around 2.85 lakh crores. That is a data which shows around 2.5 lakh is outstanding as on 31st March 2022. Whereas there is also a report which says that our requirement is almost 10 times more than what the present level of the lending is. That means there is a huge opportunity for many players to come. So just because a Paytm has come and they have lent, it's only adding to the existing requirement. It's not taking away anybody's opportunities. So what I feel is that there is room for a lot many players to come in, and there can be more players, and there should be more players. So which would be giving opportunity to more and more borrowers, to more and more beneficiaries to avail the credit in a very, I would say, hassle-free manner. If you see the history of microfinance, how this microfinance evolved, basically because, as you rightly said, we had a large number of financing institutions earlier also. In fact, if you see the history, this financial inclusion is something which started in the early 19th centuries with the starting of the Cooperative Societies Act. Cooperative Societies Act itself was basically for
Sir, may I intervene you for a minute? Do you have a earphone and microphone?
You're not able to hear properly?
Your sound quality is bad. If you don't have, no problem. Please carry on then.
I don't have.
Okay, no problems. Please carry on.
Okay, so what I was trying to say is that see that my financial inclusion history, you see, you can trace it back to the early 19th century when the Cooperative Societies Act was passed, and ever since we had a number of cooperative credit institutions coming up in the country. Of course, there were very few in that time, few before the independence, But subsequent to that, if you see, there were subsequent to our independence, there were several steps taken by Government of India, whether it is nationalization of State Bank of and creation of State Bank of India, subsequent nationalization in 1969, again one more round of nationalization which took place in 1990, which are all an effort to bring in more and more players for extending credit to the small borrowers, the small loans. So that was it's an evolving process. Subsequent to that, we also saw that banks like regional rural banks were brought in. Around 196 regional rural banks were brought in basically with an intention to extend small credit to the poor people or the small borrowers. But all these things could not achieve the kind of requirements we have. That's the reason when, as you said, that taking a cue from the Bangladesh Grameen Bank and the other microfinance activities taking place across, NABARD initiated a process of forming self-help groups, bringing women together into a self-help group, and then linking them with the banks. Because as a single borrower, a requirement would be 5,000, 10,000, or 20,000 rupees, which a bank may be finding it difficult to lend because of the cost of transaction. But when they form into a group, when they are consolidated, the consolidated amount of say 2 lakhs rupees or 3 lakhs rupees for a group, the banks were finding it easy to finance. That is how the self-help group started. But then self-help group alone did not materialize and did not materialize the requirements of the people. So that is the reason then small institutions of like microfinance institution came up in the later period of say or the early 2000s. So what I'm trying to say is that we had been doing, there had been from the beginning of 19th century, there had been several initiatives to ensure that credit is made accessible to the poor people or to the small borrowers. But the requirement was so huge, it was never, we were never able to achieve the kind of the demand. That's the reason several other steps were taken in the process, and that's how the self-help group movement came. Then microfinance institutions came, and I would feel that now, as you rightly said, fintechs are also in the same arena. Banks are there with the lending arms, but then they are still far behind the requirements. As I said, one of the study report of Brazil, which says that more than 20 lakh crores of rupees is required for the microfinance, whereas we are still around 2.85 lakh crores. So requirements are 10 times. So I'm sure players like Paytm and others can have a role in this sector.
So you are saying that fintechs are expanding the base. It is not serving the same client base. That is what you are saying.
It could be possible that they would also be serving the same client base, because the requirement may be for a person it's also high. When a financial institution lends, if you see the earlier time, the microfinance institutions also, or when they are lending to a borrower, they used to have some cap, they used to have some limits to the credit component, but the requirement could be higher than that. That is why the reason they go for borrowing from different microfinance institutions. There are they take borrowing from the second microfinance institution or a bank. So there could be more lenders coming to the picture. If you see the new regulatory norms, RBI has removed this cap of the number of lenders. They only put a cap to the how much is the outflow from the household. How much outflow vis-a-vis the household income. That is what the RBI said. They are done away with the number of borrowers. So you can borrow from 2 or 3 or 4 borrowers, but your outflow should not exceed more than 50% of their household income. That is what it is. So a Paytm can also be lending to somebody who has borrowed from some other insurance. There is absolutely no issue. But I'm saying that it could be expansion of the base, one. Number two, it could be also additional or credit deepening, as we say, bringing more credit to the borrower whose requirement is higher. But only thing is that we should be seeing that the indebtedness should not be in such a way that the outflow should not exceed more than 50% of the gap which has been kept by the
Right. And you expect that both the systems, all the players should coexist, because the overall market demand is very high. That is the primary thing. Sir, the rate of microcredit has been high. This is due to the long and layered delivery system, which is very costly. Ideally, technology can cut down, make it leaner, make the delivery leaner, and reduce the costs. It is happening, say, for example, in e-commerce. Do you see a prospect of reduction in interest rate in microcredit? And what is the, I don't know what is the current, I have some idea about the current rate of interest in microcredit, uh, but about fintechs, I don't know at what rate do they give the loans. In case you have it, please share with us.
You're absolutely right. You say that technology can bring down the cost. There's no doubt about it. Because we had been seeing in the past, with the technology, the cost of transaction uh, has been reduced to a great extent. To that extent, the cost can come down. Because if you see, basically, what interest rate is, what it's a factor of your cost of funds, your transaction cost, and your risk cost, as well as the margin which you require. So these 3-4 factors are put in together, and then you arrive at the interest rate. Suppose your transaction cost can be reduced because of the technology, I'm sure the cost can come down. Fintechs, as I understand, they charge something around 15 to 20% of interest. It may be a little bit lower than the microfinance sector, because microfinance institutions, it's basically a feet on street model, where you have a large number of army of people in the field who are in regular touch with the borrowers on a regular basis for the purpose of taking the application, processing the application, lending, as well as on collection. See, the regular touch with the borrower, it's a high touch business, let me tell you. So I don't think even if technology comes, you can entirely replace this high touch business, because microfinance sector, the concept itself is basically based on the high touch. The people meet regularly, they go and meet the persons, and based on that regular contacts only, the recovery comes on time, as well as they also will be in a position to assess the additional requirements, if any. So that will continue, but definitely fintechs will, or the technology will bring down the cost. If you see that technology has been adopted by the microfinance sector to a great extent. Initially, entire thing was physically done. The cash movement was done physically. The loan applications were collected on papers, and processing was done physically. Then collections are still going on in many places by cash only, but many have changed it to UPI mode or other kind of digital transactions. So I'm sure slowly it is going to come, but then still I feel that the field level touch has to continue, but to some extent that transaction cost can be reduced, and if it happens, the cost will also going to come down.
Okay, sir. So regulation is an important aspect to ensure growth in industry. Microfinance is currently divided in too many entities to governed under too many laws, from trust to banks, societies, etc. So this has led to problems of overlapping and some misuse in the past. Now, do you see the fintechs are the latest entrant in this sector? So do you see a case for regulatory consolidation?
Right. See, I fully agree with you that there are different type of institutions working in the microfinance sector, or which are of the different forms, formed under different acts and different laws. So they are governed by different laws. So there could be some kind of a regulatory overlapping can happen, because we know that some of the institutions like societies or maybe trust and all may not be fully governed by a regulator like RBI, but institution like us, like Sa-Dhan, which encompasses all these institutions. We have, that's the beauty of Sa-Dhan. We have institutions range from banks to NBFC MFI to the regular NBFCs. Then we have societies, trust, and other forms of institutions which do the microfinance. So they all come under our fold. So we, as an SRO, we would be in a better position to give some kind of a overall guidance, as well as overall watch on the activities of these institutions, even if they are not being regulated by the a regulator, central regulator like Reserve Bank of India. We being a representative, we represent the RBI for the purpose of self-regulation of this institution. We have a responsibility to oversee the institutional activities and ensure that things are not going beyond control. See, now, second thing is that the RBI's new norm, it has taken away all kind of prescriptions which were there earlier. Now they are just made it very simple. They are given only three definitions, three things they have said. One is a definition. What is microfinance? Microfinance is nothing but a loan given to a poor household. And what is a poor household? They said it is 3 lakh rupees per annum. If a household with 3 lakh rupees per annum is taking a loan, is considered to be a microfinance. Number one. Number two is that in microfinance, if it is a microfinance loan, its repayment should not exceed more than 50% of their household income. So repayment obligation should not be more than 50% of the repayment. So these are the 2-3 small, and how much is the loan to be given? That amount is not been fixed, only the repayment. So even if somebody,
so they left it open to the players, but put a
yes,
cap that you cannot,
yes,
lead it to indebtedness.
exactly. So the repayment obligation,
Competition has been regulated. Simple. That is the point.
competition has been regulated in the sense it should be it should not end up in over indebtedness, and over indebtedness. What RBI has mentioned that if it exceeds more than 50% of their annual household income, that becomes an over. So that is the only limit which RBI has kept. So keeping that as a cap, I'm sure any institution which works, whether it goes beyond the regulatory norms of RBA, they have to follow these norms, because that will be watched by the RBA or the institutions like us, SROs like us, and we would be in a position to bring in some kind of a semblance of sensibility in the system.
Sir, are fintechs part of any self-regulatory organization?
Right now, I don't think so, but we can have them, because Sa-Dhan, we can bring in even fintechs as a member. There's absolutely no. Right now, as I understand is that there are not many. No, not any. That's what I think.
But
So because
we cannot keep them out for long.
we cannot keep them. Definitely, we have to bring in, especially as you are mentioning, some of the fintechs have already started becoming larger players in this sector. I'm sure we need to bring them also to our fold, and we need to bring them under the self-regulatory control of the organizations like.
Right. Sir, technology works like Hydra. You can't stop it. You have to adjust to it. Now, together with GST, UPI, and smartphones, simple, the IT technology to put it straight, has been formalizing the economy at a very fast pace. Even the roadside palm sailor has been mapped in the system now. And this mapping will, I expect it to improve substantially, a very, very high pace in next 5 years, with the arrival of things like open network for digital commerce, WNDC, etc. Now, it clearly means that the financial sector is on transition phase. It's at the onset of a transition, and that's coming. The microcredit segment, as we discussed before, is that it was working with rudimentary use of technology in the past, where people were ahead and the primary assets. How it is gearing up with the challenge of this transition, and particularly technology absorption. I'm particularly keen to know about these smaller players. You deal with the smaller players in your and do you see the prospect of a consolidation of the industry in favor of the bigger players?
And see, definitely the consolidation will take place. And we have been seeing in the past, if you have seen several smaller institutions or even bigger institutions like SKs, for example, the industrial SKs. They have been, that is Bharat Financial Inclusion Limited. They have got themselves merged with Indus Bank. So These kind of consolidations will definitely happen. But as I said, on one hand, you have the consolidation and becoming big, larger players, but there is also an opportunity for smaller players to exist and new ones to come. Right now, if you see uh, the overall 2.85 lakh crores of microfinance, if you see, 80% of it is in 5 major states. So the remaining states are still laggards. There are, and you'll definitely agree with me. The states which are not in that five, the first five, are also equally recurring the smaller credits, and or maybe they may be recurring more because the major five includes the Tamil Nadu states like Tamil Nadu, West Bengal, Kerala, Bihar, and all. But there are other states which are really recurring the credit. They are not into the major microfinance map. So more and more microfinance players are good, smaller players are good, and smaller players, they can grow and they can either get merged into a bigger one, or they can graduate themselves to a higher level of a financing institution like a small financing bank. This process will continue. As far as India is concerned, I'm sure the requirement is so large. There are places for more people to be there, more players to be there, and there will be this transaction will take. Now, coming to your question of technology. Technology, yes, I fully support that. Technology has to come. But if you see the microfinance sector, if you see the past, there has been a gradual adoption of technology. As I mentioned earlier also, if you see the initially, it was entirely a physical activity, whether going and collecting the applications, bringing in the physical form, the paper form. Then it was being loan was disbursed in a cash form. Collection is done in a cash form. All these things are happening. Everything was physical, but slowly now 100%, almost 100% disbursements are happening in digital form. Almost every microfinance institution are disbursing loan. As you also mentioned, the Pradhan Mantri Jan Dhan Yojana has enabled most of the borrowers to have an account of their own. So everyone has a bank account. So lending, the disbursement has become more, more or less 100% it is digital. Even many of the microfinance institutions are also sourcing the application digitally. They go with the devices like tabs or even mobiles. They go and do the primary data sourcing with this device. So that has helped in reducing the paper. Otherwise, you go and get an application in the paper form, bring it to the office. Maybe then it gets get transferred into the computer. It gets uploaded into computer. But then now that is all gone. The field level itself, they can even credit check. See, basically when you do a credit check, basically when you want to know the credit history of the person, is over the indebtedness or how much is the indebtedness, you need to do a credit check with the credit information companies like Grip or Equifax.
And that is the biggest help that technology has brought in.
When you exactly, you're right. So in the field, you can know. You can say yes or no to the person. Immediately, you know whether it, so those things have happened. So, but it's a gradual process. It is going to happen, and now many of the microfinance institutions have also started doing the collection through the UPI mode. Many of them are using many of the apps, the payment apps, and they are started the collections. But that is a process. Still, I feel it's still a little bit more required. But in spite of all these things, I still feel you can't leave the touch with the field. If you leave the touch with the field, because you are dealing with poor people, you are dealing with so if you don't meet them and make your presence known to them, sometimes there could be a possibility because their requirements are also there. When they have money with them, they may also have other hundreds of requirements for them. So there could be a possibility of
handholding them, guiding them.
So technology will be there, I'm sure more technology will come into the sector, and technology is going to be there, and it is going to reduce the cost as we discussed in the earlier also. It will bring down the cost to a great extent. But then, as you said, the handholding of the poor people, the borrowers, have to be.
Absolutely, absolutely. I do fully agree with you. My point was, at no point of time I'm denying the importance of that touch. As
So,
you rightly said, that poor man, this is exactly why people run into indebtedness. They get the money. When four people are approaching them, they treat it, they blow up. There are a lot of ways to do that. Someone give the marriage थोड़ा ज्यादा धूमधाम करके, and then they blow up and then they suffer. This is a old problem. So that handholding has to be there. He has to be guided. He or she has to be guided. He or she has to be helped. There are a lot of market information that your people do give them. Like whether this trade will be successful or not, what is the situation. So that at no point of time I'm denying the importance of that. I'm only saying that the technology absorption has to be there, and if as it happens, say for example, the retail space, those who will not be slower to absorb the technology, they will be out of space. That is a clear for future,
I do agree.
writing on the wall. So to
Exactly.
that extent, how much do you think that this sector is trying to cope up with these challenges? This is, I think, a very big challenge to the sector, because it has never thought in terms of technology, it thought in terms of people.
I fully with you on this matter. And technology adoption, as I said, has been happening, but because the cost involved in the technology adoption would be a little higher. So we need to
Exactly.
have some means of having some kind of a sharing of technology, like having somebody in the form of, say, like you have the SaaS model, something of that. Somebody who owns the technology can also share the services to somebody else to meet their requirements. Something of that sort can emerge. Right now, I don't know how it is going to happen, but then yes, without that, you will not be able to survive the market. So technology, you have to be there, and technology adoption has to be an important aspect as far as even the small players are concerned. So that has to be there. Some way, via media has to be worked out if the agency or the institution is not in a position to get the technology by themselves. Maybe something in the form of, as I said, the SaaS model kind of this thing, can come up. Some common provider can be, some service provider can emerge and start extending this kind of
So
thing.
it is still in the nascent stage, in the
Yes,
early stage of
it has
thinking.
to.
Okay.
I agree.
And sir, finally, the question about illegal loan apps. Now, I'm asking this because MFIs are all, microcredit sector is always riddled with controversies. This is almost a second, almost a name of the game. Not because that it is at their fault, but because they deal with too many people, and then the lot of issues, the political controversies, these that comes up. Now these illegal loan apps, don't you think that they have the potential to make the situation even a bit worse for you, for your guys who will be moving on the field? And why can't it be stopped, sir? Whether Sa-Dhan is taking up this issue very strongly with the government, I don't know about the intricacies, but what it appears to me is that the app is available in the app has to be available in the Google Play Store to be downloaded, right? So if the government or a government nodal agency identifies that these are the legal apps, without that, no other app for loans and financial matters should be allowed in the store. Then the system, then this can be easily plugged. Why it can't be done? Or are you taking up this issue?
As I said, I'm still yet to take charge of Sa-Dhan's activities fully. So I'm still not fully aware about this aspect and how Sa-Dhan had been dealing in how Sa-Dhan is dealing. But as a point which you raised, I am fully with you, fully agree with you. because of the kind of people whom with microfinance sector works are a vulnerable section. They are in need of money, so anybody who offers something, they get then they become prey to that kind of things. So the best thing is to educate them. Best thing is to impart financial literacy. So more and more financial literacy, more and more education to the people as is the only means of making them, I mean, keeping them away from this kind of, I would say, the people who can take them for a kind of a ride in the name of credit. So probably if we need to do a lot of on that, I will. I'm right now, as I said, I'm still not taken charge
Understand.
fully, so I will be able to make a comment on that only subsequently. But then, yes, if there is an issue, it is an issue. We need to work on that.
Thank you so much, sir. Thanks for giving
Thank you.
this interview.
Nice talking to you, Pratim. Thank you.
Okay. Thank you so much.